Good morning, everyone. Welcome to WorkCover Queensland's Premium Edition webinar. Today, we will be discussing the key factors that make up employers' premium calculation and some of the ways you can minimise your premium. My name is Elise and I'm the Senior Comms Consultant at WorkCover Queensland, and I will be your host for today. Before we begin, I would like to acknowledge and pay my respects to the Yugara and Turrbal peoples as the traditional custodians of the land in which we work. We thank them and their elders past and present for their ongoing connection to land, waters, culture and community. Now on to some housekeeping for today. We will record this session and later send you a link to the recording along with this slide pack and a short survey to gather your feedback. The recorded session will also be uploaded to the WorkCover Queensland YouTube channel and via our socials. Please feel free to submit questions during the webinar using the questions panel to the top right of the screen. If time permits, we'll do our best to answer some of your questions at the end of the webinar, and we will also be addressing some of the questions submitted at registration. As we're unable to answer any policy or claim-specific questions, we do encourage you to contact your policy's relationship manager if you have one, or to reach out to the customer advisor handling a claim or claims for your business. And finally, if you have any technical issues, please refer to the help information for GoToMeeting, which you will find at the bottom right of your screen. I'd like to now introduce you to today's presenters. First up, we have Juan Danga, or JA, who is WorkCover's Acting Head of Premium and Investments. JA and his team provide technical support and advice to both our internal teams and policyholders when it comes to premium, debt and recovery, and audit and compliance matters. JA joined WorkCover in 2003 and has worked across various roles within the corporate side of the organisation, including financial and management accounting, tax, payroll, and business analysis. Since 2016, he has led the premium operational support and strategy area. JA and his team's primary focus is to ensure policyholders are provided with the right level of premium coverage based on their injury risk profile. Thanks, JA, and welcome.
Thanks, Elise. It's good to be here. Good morning, everyone.
And our next presenter is Melanie Stojanovic, Head of Small Business. Mel oversees a portfolio of customers who run small businesses across a variety of industries and provides advice on statutory and common law claims and premium issues. She has over 20 years experience working in injury management in both clinical and insurance environments, with previous roles including industry manager, case manager, technical training manager, and common law manager. Mel's passion and expertise lies in injury and relationship management and assisting people with injuries to recover as quickly as possible. Thanks, Mel, and welcome.
Great, thanks, Elise.
Okay, so today's agenda. We will be looking at some of the basics of premium to start, including what is a WIC and what is an industry rate. We will then move into the specifics of premium calculation before moving on to ways in which you could minimise your premium. We'll then touch on the key policy renewal dates coming up for this year, and finally outline some of the resources available to employers surrounding premium, including the support WorkCover can provide. Before I hand it over to our presenters, I would just like to remind our listeners that any advice given or questions answered today by WorkCover is general information only and should not be taken as legal advice. That's all from me for now. I'll pass it over to Mel to begin.
Great, thank you. Welcome, everybody. The session this morning, as Elise went through, will cover off some of the premium basics to start with, and this is some of the terminology you might hear us speak about when you're discussing with WorkCover the premium side of your policy. So the first one is the terminology around WICs. So this stands for WorkCover Industry Classification. So every accident insurance policy has a WIC or a code that connects to your industry classification based on your predominant business activity as the employer. So this is basically a descriptor or a number descriptor of what your industry is that you work in. So for example, the top line there in the table in the centre of your screen, you'll see that 323109 describes plumbing services within the construction industry. So every policy will have a code attached to your policy. We also use the ANZIC classifications, which are the Australian and New Zealand Standard Industrial Classifications, to set the basis for how we work out what the codes are within the Workers' Comp Queensland space. And it's designed to make it easy and consistent across the industries. Now, each policy can have more than one WIC. So this might occur in situations where you carry out more than one business activity and the activities operate from separate locations and the activities aren't dependent on each other. So that's one set of criteria to have more than one WorkCover industry classification. The other one is if you run a labour hire or group training business where you're actually employing people across different industries quite discreetly from each other. So, for example, you may also have 2 weeks if you're a retail business and you operate a clothing store and a cafe or coffee shop next door to each other. So predominantly you'll have 1 week, but there will be some certain situations where you may have multiple weeks on your policy. The other thing that we often refer to, or terminology we use in WorkCover, is your industry rate. So industry rate refers to the average premium rate that is assigned to a WIC or a specific industry classification. So for example, that table we saw on the previous slide where mining will have a certain WIC, they will also have a specific industry rate. The rate is based on factors such as the claims history for that industry, the risks that are evident in that industry, and also the workplace safety performance of that industry. The rate serves as a starting point for calculating your premium as an employer, and we adjust that based on your total wages and then your individual claims experience. So we start at an industry level and we work down to your individual level. You can actually see the rates they're set each year in the Queensland Government Gazette, and following this webinar there'll be information and links sent out where you can dive a bit deeper into this information. The industry rate specified in the Gazette is reflective of the industry-based risks and costs that we've outlined above, and so that means the higher the risk of an injury within that industry means that that industry will have a higher rate, and therefore a lower industry rate indicates there's lower risk being demonstrated within that industry over time.
Fantastic. Thanks for that, Mel. Going to move into our first poll for today. The question is, do you understand how your organisation's premium is calculated? I'll bring that poll up for everyone now and give you a moment to vote as well. Okay, I'll close that poll off now and we'll have a look at the results. So I can see we've got about 67% of everyone sitting on sort of, and about 33 on not at all. So it's good to see there's 0 for absolute yes. So it shows that we really need this webinar today. But look, it does show that there is a bit more to explain and to dive into, and I hope we can do that in the coming slides for you all. I'll hand over now to JA.
Thank you, Elise. Okay, let's explore premium and how it's calculated. But before I launch into our conversation, I'd just like to preface quickly that today's conversation is more about the fundamental drivers and the major componentry of premium. It's not really to delve into the low-level technical and mathematical architecture of our pricing methodology. It's more about the fundamental drivers that go behind our premium calculation. So as Elise mentioned earlier, I'd encourage our policyholders and our audience to reach out to your WorkCover contact or relationship manager to discuss any of your individual premium circumstances. And of course, my team of subject matter experts are available to complement any premium related conversations. So premium at the very highest level, I like to think of the fundamental drivers as the pillars of our premium calculation. Mel mentioned WIC. I see this as the identity of your policy. It's, as Mel said, it's our starting point. It's the groups that you belong to and your industry peers. It's how your WIC is, it's your allocation within the industry. So just to give a bit of context to WICs, we have about 561 separate WICs published in the Gazette, and this spans 19 industries. Our example today was construction, but we have mining, manufacturing, wholesale trade, etc. Now, how is your WIC determined? We look at a handful of factors. Your predominant business activity is the primary factor, or the nature of the goods and services that you supply. We'll also look at the majority of your sales and income. Where does that come from? Also the activity that your workers perform in the majority, and the category or group of staff that you pay the majority of wages to, for example, labourers, carpenters, technicians, etc. And we also look at the type of services that you advertise or promote your business as being able to supply. So that's WIC. The next component or the next major driver is wages. And when I say wages here, I mean accessible wages for premium calculations specifically. So there are components that are in and others that are out. And I see this as what is the ordinary remuneration for daily toil? We do have a wages definition manual that we'll refer a link to at the end of the session. But essentially, what's included in wages when we do declare to WorkCover are our gross PAYG salary and wages components. Superannuation, I'd like to call out specifically. Superannuation is oftentimes excluded by employers when they do declare at renewal. Any benefits that we provide our workers that have a monetary value, and there's contractor payments as well, where contractors are deemed as workers. And for this, we have our ATO worker tool that's also published that we'll link to at the end. Some of the things that are excluded from wages in terms of accessibility, any allowances or reimbursements for work-related expenses, lump sum termination payments, and payments made to directors of the business. So when it comes to accessible, there's components that are in and others that are out. The other main component is claims experience, and this is the cost incurred by WorkCover in managing your workers' claims for workplace injuries. This is the experience that you have as a business, and it informs your premium rate, which is the next item on the list. The premium rate is how you've deviated away from industry over time, and it's basically your performance against industry rate. It's what I call your evolution to your true rate. And when it comes to the calculation itself, premium on our notice of assessment is for every $100 of wages, we apply your premium rate to, and that devises our premium value for the year. Now, I just wanted to discuss the 18-month rule. I have a if-then statement at the top, so this is my Excel coming out. If you have just started employing within the last 18 months, then your premium rate equals industry rate. So why is this? It's our starting point, as Mel mentioned earlier, and it's fair. For fairness and equity from the outset to your peers within your industry who are performing the same predominant business activity, you enter the scheme as a new business priced at the established industry rate. So it's the injury risk profile of that industry that you start off at. And then over time, you evolve to your premium rate. And this will be after the 18-month period. So why 18 months? Over the course of your first 18 months, it's reasonable to expect that you will have developed sufficient of your own experience to start influencing your own destiny, and thereby start to be able to influence your own individual rate going forward. So this is where we've mentioned you're making your own deviation away from industry, and this is after your 18-month period. Now, you've held your policy for more than 18 months. We now look at how large you are as a business in terms of the level of wages that you pay. So we have two methods in calculating your premium. For who we call our small employers, those employers who pay $1.5 million or under in wages, we have what's called the simplified premium method. And Mel will expand on that in a minute. For our larger customers, employers who are paying over 1.5 million, we have our experience-based rating method, and I'll discuss that in the coming slides. And of course, there is transition between the two methods. As businesses grow from small to large, you'll transition in terms of your pricing methodology. And sometimes we can transition the other way, from large to small.
Great, thanks, JA. So we'll go through the simplified model first. And as JA explained, this is for employers with declared actual wages of $1.5 million and under. So there's two key factors that go into calculating premium under this model. The first one is total wages. So the formula is dependent on the wage size that you've paid in the previous financial year and what you're estimating your wages bill will be for the coming financial year. So that's the first thing that gets taken into account. The second one is back on this concept of your industry rating and then your premium rating. And so that's what we look at for the policy. And we include your claims experience relative to the industry rate. So as Jay explained, in the first 18 months, you would start on 100% of the industry rate. And if you look at the table on the right, you can see the different policy ratings that we apply to each small business policy. So policy rating 3 is 100% of the industry rate. So you're paying what everyone else on average is paying in your industry at that rate. However, on the simplified model, there is opportunities to reduce your premium rate and moving down to a policy rating 2 or even a policy rating 1, which only means that you pay 80% of what the rest of the industry is paying on average. Or based on your claims experience, you can potentially move up in ratings to a policy rating of 4 or 5, depending again on how your claims experience plays out from the previous year. So that table just gives you those movements. We only have the 5 ratings, and I'll go through what the benefits of those ratings are. So there's 3 key benefits of this simplified model. A lot of it is to protect the volatility specifically for small businesses, to give you some certainty in what your premium is going to be year on year. So the first one is a 10% movement limit. So your policy rating, so that those ratings between 1 and 5, can only go up or down by 1 rating each year. So this means the percentage of the industry rate that you pay can only go up or down by 10% of that current year industry rate. And that makes changes predictable for you, less volatile, and much easier to manage from a cash flow perspective. The second benefit is a $500 claim cost protection. So when you renew your policy, the first $500 of total claims costs from the previous year won't count towards your total claims experience. So for small or simple claims, or it's just a doctor's visit or something like that, it will not count towards the experience that we include when calculating your premium. Also, it's great to note that journey and recess claims away from the workplace, the costs of those claims in total are not included in your premium calculation. And the third benefit of this model is a no claim reduction. So you may relate this terminology to some of your car insurance where you have ratings and no claim impacts. And so it's a similar concept that we've applied here. So for the no claim reduction, if you have no claims costs for the year, your policy rating will automatically improve, so reduce from a rating 3 to a rating 2, and that means your premium will therefore go down. If you're already on a rating 1, the benefit is you keep that rating 1 for the following year if you haven't had any claims costs. So that's the summary of the simplified model. I'll hand back to JA to take you through how our experience-based model is applied for larger businesses.
Thanks, Mel. So our large employers paying wages over 1.5. Okay, so we've kind of touched on wages and we've touched on industry. The third component is performance, and these are the, as I said before, the drivers of our premium for EBR application. I might spend my time on performance here because we have started talking about how we deviate away from industry. So an employer's performance is driven by their claims experience. It is the resulting premium rate relative to their industry rate. So for our employers, it's expressed as a percentage of industry rate. And this allows us to benchmark our performance against our peers within the same industry. I've got a snapshot of how it appears on WorkCover Connect. In that little table there, we have an example of a premium rate for an employer that's 0.606 compared to their industry rate, which is 0.598. So from a performance perspective, they are 102% of industry rate and therefore performing a little bit above the industry in terms of premium rating. So the goal is, as time goes on, we will approach our premium rate, and if we are performing well in terms of claims experience, we'll come down below the 100% of industry rate over time. Continuing with our conversation about performance, when looking at our performance under the EBR model, we consider claims experience, as I mentioned. This is the cost of WorkCover managing your claims. This is the E in EBR experience. So what goes into this? We consider the cycling total of 4 years worth of claims costs, the 4 preceding years of claims costs at each renewal. And this is made up of 3 years of statutory claims costs plus 1 year of common law costs preceding that period. This is what makes up our claims experience that factors into performance. What's not included are journey claims, recess claims away from work, and costs of individual claims exceeding the cap of $185,000. So what are the benefits of the EBR model? There's a list there. The first one is lowering your premium by improving your performance. We can do this by implementing safe work practices to reduce injuries and supporting our injured workers in getting back to work while their injury is being managed. And this speaks to our influence on our claims experience. And influence is important, which I'll touch on in a second. There's a 30% limit on annual premium increases, and this prevents significant year-on-year premium increases. We may have large catastrophic claims that might occur, unfortunately, and these do occur from time to time. It's good that a limit on the actual premium increase is in place so that we don't get that bill shock. I mentioned $185,000 as a cap, so any excess over that is excluded, as are journey and recess claims away from work. There are premium rate cappings as well that are inbuilt into the formula of the EBR, and this prevents significant rate increases as well, driven by experience. And then influence, I mentioned influence. So we, as individual employers, can influence the industry rate. We do our little bit for the industry. So through our little contribution towards safe practices at work, we can collectively, reduce the industry rate. And underlying all of this is smoothing of volatility. So premium will grow over time, or will change over time, I should say. So that it's not volatile over the life of our policy, there are protective mechanisms in the EBR designs that smooth out the pricing over the long term. So the themes really are influence through good claims and safety management, capping mechanisms inbuilt, volatility smoothing, and as previously mentioned, it's designed to strike our true rate for our injury risk profile over the long term. Premium on your notice of assessment. This is how it's calculated. The first element there is assessed premium, and this is informed by the wages declarations and the premium rate. Of course, GST at 10% is added to that, and stamp duty of 5% on the GST inclusive assessed premium all make up your premium payable. And we can view your premium breakdown on WorkCover Connect under the premium details area. You can also see the full formula of how your premium is calculated using the premium simulator on WorkCover Connect. So let's have a chat about that next. The premium simulator is a tool on WorkCover Connect, and it's quite useful to help us plan and budget for premium. We can kind of play around with variables on the simulator to estimate what our premium is likely to be given variable wages and variable claims costs. It's available on WorkCover Connect, as I mentioned, but please note the simulation is only an estimate of premium, and it can vary depending on your final declarations of actual and estimated wages, the changes that occur in industry rate and industry factors from the prior year to this year, and of course, where claims costs finally end up at the end of the year.
Great, thanks, JA. So we get to, I suppose, the crux of today's session is how can you influence, as an employer, how can you influence or minimise your premium? What actions can you take? So I'll take you through first how you can impact the simplified model. So those who have an actual wages of $1.5 million or under. There's two key components. The first is obviously to prevent injuries in the first place. So because the model is based on your claims experience from the previous financial year, anything that you can do as an employer to improve the workplace health and safety within your environment will ultimately reduce the claims experience that you have, and that therefore will minimise the premium that you pay. There's great resources available, and again, post this webinar, we'll send out that list with a lot of links to help and support you through the process of identifying where you can minimise exposure to risk. So employers can either work with WorkCover and or Workplace Health and Safety Queensland to develop and implement effective health and safety practices. There is also a key program offered through Workplace Health and Safety called the Injury Prevention and Management Program, or IPAM, that really targets and specifically addresses the risks within your industry and how you can implement policies and procedures to reduce those. The second one is if, unfortunately, you do have an accident in the workplace and someone is injured, it's about being proactive in supporting that worker, lodging a claim and returning them to work as quickly as possible. So under this model, that's how you can help keep your claims costs low, and that will help work towards the $500 claims cost cap as well that's built in. So for example, if you can get your injured worker back to work on suitable duties as soon as possible, you could potentially keep your claims cost for that claim under $500, and that then will reduce the impact on your premium. I'll just step you through an example of how this might apply in real life. So let's say you've got a chef in the kitchen of your business and they've cut their hand on a knife preparing food. Obviously, first aid's applied, potentially needing stitches, so we get the worker to the doctor as soon as possible for treatment. They then go home, they rest and lodge a claim for work cover. And that's a key point about lodging that claim as soon as possible. From the employer's perspective, the sooner that you can help that injured worker complete an incident report and provide all the relevant information to WorkCover to approve the claim, then the sooner we can support you to get the person back to work. We encourage employers to reach out and contact their injured workers as soon as possible following the injury and discuss with them the impact of the injury on their ability to work and whether we can support them to return to work, whether it's the next day or as soon as possible, depending on the nature of the injury. If the worker in this scenario is able to return to work the next day, you've really minimised any time lost, and it could be on suitable duties, and that's something WorkCover can help you devise and implement for your injured worker, and then ultimately have that claim closed as soon as possible. In this scenario, for example, the cost of the claim may only be that of bandages and the doctor's appointment, which could total as little as $160. So the impact on your premium by being proactive through facilitating early return to work for your employee is that you've been able to keep the claims cost below $500. And by doing this and keeping it under $500 for the remainder of the financial year, any claims costs are not going to contribute to your premium under this model. I'll hand over to JA to now talk through how we can apply these similar activities to the EBR model.
Thanks, Mel. Yes, so I think the theme of claims experience is equally applicable to EBR customers. I've got three approaches here. The first one is improving return to work. So this is around helping to get our injured worker back to work sooner, which leads to better claims outcomes. And of course, the cost impact of that. Improving the support that you provide to injured workers during their claim and earlier in the claim, or by offering them suitable duties, all will contribute to improving their return to work. And this is about duration, minimising the duration of your claim and getting them rehabilitated, back to work, back to life as soon as possible. The second point here is around procedures, policies and practices that we have in our workplace. And Mel, you mentioned the IPAM program, which is a great joint initiative. We have control over our workplace. So the better our health and safety policies, procedures and practices, the better the environment is for the safety of our workers. And on the IPAM program, it was conceived, I think it was 2010 and 11, if my memory serves. Around 2,000 employers have benefited from participating in that program, which is really great. The third approach here is showing a commitment to workplace safety as a culture and training around that. So by demonstrating that we as employers are committed to a safe and healthy workplace, and building that culture of safety can help improve our claims history. Now, the themes around this are about what we can control and what we can influence in our own workplace. So as we've mentioned, underlying our ability to minimise premium is claims experience. So accordingly, how we support our injured workers during their claim and how we reduce the rate of injury incidents at our workplace and what safety environment we establish in our workplace all make the difference. So let's go through a scenario. In here, we have an employer who's experiencing a higher than average number of mental injury claims. They conducted a staff survey and found that workers were stressed. They were feeling stressed given the nature of their work, quite demanding. The staff also came through in the surveys that they did not feel supported or valued by the business in times when they were stressed. And this was attributed to the increase in the significance of their claims. So what do we do in this scenario? I'm going to cheat and I'm going to refer back to my second point, which is about implementing practices and policies and procedures in the workplace. So the employer worked with various stakeholders to develop a well-being program. This program enabled staff to access information and initiatives to improve their physical, mental, and emotional well-being. These initiatives were annual health checkups, yoga classes, and facilities for shower and bike, as well as workshops around well-being, all aimed at improving the well-being of our people. So what was the result? Since the introduction of the program, of course, we saw an improvement in the physical and mental well-being of our workers. It was something that we put in place to help improve our mental and our mental well-being around work, and that, of course, resulted in a steady reduction in mental injury claims. So by lowering the number of claims, we have been able to improve our claims experience, and that has a knock-on effect to the premium rate over time. I'll have a chat about our premium discounts that are available to our employers. So the first one here is apprentice discount. So we talked about wages and declaring our wages at renewal time. Apprentices are workers for the purposes of workers' compensation. So they're covered by your policy, just like any of your other workers. If you're a business that employs apprentices, you can benefit from our apprentice discount. And the way this works is that you remove the portion of apprentice wages from your wage declaration. This results in a lower assessable wages level on which your premium rate is applied. Now, just to note, the discount doesn't apply to trainees. Trainees are different. So an apprentice, on the one hand, provides training in a skilled trade, whereas a traineeship provides training in a vocational area. So to be regarded as an apprentice for wage declaration purposes, your worker or your apprentice must sign a training contract with you to undertake an apprenticeship declared under the Further Education and Training Act 2014. The Department of Employment, Small Business and Training publishes on their website a defined list of available apprenticeship programs against which your apprentice will be coded. So just to make that distinction clear, trainees are not apprentices for wage declaration purposes. The other discount I'll touch on is our early payment discount at renewal. So to take advantage of this discount, which is 3% of our total premium payable, we would declare our wages before 31 August and pay the full premium by 16th of September. So if we meet both of those deadlines, we can avail of the 3% upfront early payment discount. And just to note, the discount doesn't apply to our minimum premium product, which is $200 or less in premium. It's an administrative mechanism that encourages on-time declaration and payment, and it's only available within that limited renewal window of 1 July to 16th September.
Brilliant, thanks JA. So it's time for our second poll for the day. The question for this poll is, what area do you think your organisation can work on to help minimise your premium? So a bit of a recap of what we've just gone through in the last slides. The three options I'll put up for you in a moment. Option 1 is reducing claims costs. So this may be through improving return to work strategies, such as providing suitable duties in a timely manner. Option 2, gaining a better understanding of how WorkCover looks at your individual performance and how it relates to your industry, particularly for larger businesses. And option 3, working with WorkCover and Workplace Health and Safety to develop stronger workplace health and safety initiatives. So I'll bring this poll up for everyone now and give you some time to vote for this one. Okay, thank you. I'll close this one off now and share our results. So 60% said understanding how performance relates to our industry, and 40% said reducing claims costs. So I'll pass on to Mel now to dive into some key policy renewal dates for this year. Over to you, Mel.
Great. Thanks, Elise. So JA's touched on some key dates to qualify for the 3% discount on your premium. However, I just want to start from the beginning. It's coming up in the next few months where you'll be receiving your wages declaration notices to submit back to WorkCover. So it's really important that by declaring your wages and paying your premium between the 1st of July and 30th of September, you have continuity of your workers' compensation policy. So some of those key dates to throw into the diary: from the 1st of July, it'll be open to start to declare your wages early using our online services or over the phone, and take advantage of the payment plans that we put on offer as well. All of the wages declarations are due by the end of August, so it's another date to lock away is August the 31st. And again, that's open for 2 months to get through the calculations and lodgements. The key date for payment is September the 16th. So if you pay in full by this date, as JA highlighted, and your wages were declared on time, so between the 1st of July and the 31st of August, you will receive a 3% discount on your total premium payable. If, however, you can't pay by the 16th of September, or you want to go on a payment plan, your full premium payment is due by September the 30th. So please lock those dates away in your diaries, particularly if you're intending on taking advantage of our 3% discount. So as we've discussed through the presentation today, there's a lot of resources available to support you, whether you're a small business or a large business. So I'll just take you through some of the resources that we'll be sending out post the webinar. So there's some great benefits that you can get, and also ideas and support to help reduce your premium where we can. Some of these include WorkCover supporting you to improve return to work strategies, like helping support you through suitable duties plans. So there's some examples on the website of what they look like, and also encouraging you to reach out and speak to WorkCover if you're in a situation where we can get your injured worker back to work on suitable duties. You'll also find some industry case studies that show you the best way to maintain a safe workplace for your workers, and also reduce workplace injuries in the first place, which is our ultimate goal. We can help you understand how we look at your performance and the way that it relates to the industry overall, and discuss what your particular trends might be for your industry or your particular workplace. There's a huge amount of resources available from Workplace Health and Safety Queensland, and particularly, as we've mentioned a few times, the IPAM program, which you all will have access to. So if you want to find out more about the support that we can provide, we have a 1300 number, or you can visit our website directly. If you are a larger employer and you have a WorkCover relationship manager, they can also support you in identifying particular trends in your business. So please reach out to them if you have any questions. Or if you have a current claim with WorkCover at the moment, your customer advisor that you're currently working with can help support you and your business through the claims process. I'll hand over to JA to take us through some of the resources and online portals that we have available for employers at WorkCover.
Thanks, Mel. WorkCover Connect. WorkCover Connect is a tool available to our policyholders. It's a great tool. It allows direct information to you on currently managed claims, for example, and your premium and policy matters, as well as trends and analysis. So we encourage as much as possible for you to self-serve with the tool online. It is designed to make quickly and easily available to hand an overall understanding of what is impacting your policy, essentially your policy's landscape in real time. So things like up-to-date claims information, access to calculations on premium, remittances, electronic remittances, and you can notify WorkCover of incidents as well and register claims in one quick step. If you're not set up for an account just yet, it's very quick and easy to set up. And there is options for multiple contacts as well for your team to have access to your policy and any related information. I see it as an online interface between yourself and us over which you can transact and interact, or simply just draw oversight information on your policy. So it's a great tool and I'm highly encouraged to use. In terms of online resources, the slide pack will include the links to these websites. WorkSafe is our website. We talked about WICS and our WorkCover industry classification publication. Business Queensland, which is a great website for new businesses starting off. The ATO worker determination tool, which we mentioned when we're determining either worker or contractor. The wages definition manual, and of course the WorkCover Queensland Gazette notice.
Fantastic, thanks JA and thanks Mel. Before we finish up, we'd like to go through some of the questions you submitted during registration. I will bring up the first question for today. So for common law claims not yet finalised, does the estimate get calculated as a figure or cost to that point only? I might hand this one over to JA to answer.
Thanks, Elise. Yes, so for EBR employers, it is the estimated total costs that go into our claims experience component for the premium calculation. So for common law claims that have not yet finalised, that means the estimated total expected damages and costs expected to be incurred are what is included in the claims experience. For our simplified premium employers, it's the actual costs that we incur for common law claims.
Thank you. So our second question, can a policy differentiate between higher risk and lower risk employees when it comes to calculating premium? I'll hand this one over to Mel to answer for us.
Yeah, great. Thanks, Elise. So we talked through the WorkCover industry classification earlier, and everything we've been talking about today is connected back to the industry itself rather than to individual people. So just wanting to highlight that any risk or calculation of premium is based on the industry at an industry level, and then how you perform as an employer as a whole. And so we're looking at the predominant business activity to risk rate your business. We don't look at individual job descriptions or employees who may be more risky than others. It's about your predominant business activity as an employer.
Fantastic, thank you. And our final question for today is how comparable are premium calculation methods between states? So this obviously came in from an employer who has workers working across multiple states. I'll hand this over to JA to answer.
Thanks, Elise. Okay, so in a word, no, we are not comparable between jurisdictions. And I've said on the slide here, each state has its own legislation, its own scheme design, industry rates, and therefore premium methodologies. So we're not comparable. Between the states, whilst we as insurers all aim to charge the right premium that's commensurate or representative of our risk profile, how we do it between each jurisdiction is very different. Scheme design of each separate state make the architecture of premium valuation and the methodologies between jurisdictions incomparable. From a pure methodology point of view, the Queensland EBR is what we call a variable anchor, where over multiple years, the employer's rate evolves a long way or can evolve a long way away from the initial starting point, which is industry rate that we've mentioned. So the deviation from there to our premium rate, is based on our size and our claims experience, and that changes over time, with the goal being that we strike a premium rate over the life of our policy over the long term that's truly representative of our injury risk profile. And that all comes from our claims experience. So in Queensland, employers evolve to their natural rate. The larger employers, because of their size, give them the ability to influence their rate in a quicker manner and get to that rate quicker through good management of claims experience, etc. And for smaller employers, we'll get there, but not as quick. And for small employers, our rates respond more or are more reactive to movements in industry factors rather than their own experience. In contrast, most other states, whilst Queensland is called a variable anchor method, most other states are a fixed anchor method. So for each year, that premium rate will vary or deviate away from the industry rate in a limited way, in a way that's formulated by the mechanisms built into their pricing calculations. So I'm sorry, that was a little bit long-winded. That was just me saying no in a long, sort of drawn-out way. Sorry.
Brilliant. Thanks, JA. Alrighty, so before we finish up, I'd just like to go through some key takeaways. I'll pass over to Mel.
Great, thanks. So top 3 takeaways, really simplifying what we've gone through today. And this, again, will be available if you want to go back and look at the detail. But the first one is to really look and understand what model is applying to your business. Are you $1.5 million or less in your total wages for the financial year? And what does that mean for you, depending on which model you're in? Or are you more than $1.5 million and sit within the EBR factors? So understand that is your first point. Second is consider how you can go about minimising your premium and get in touch with us if you need any help at all. That's what we're here for. So the things we've gone through primarily are about injury prevention in the first place, and lots of resources available and IPAM through Workplace Health and Safety, and or consider how can you better support, reach out, contact injured workers so that we can get them back to work, get the treatment they need and back to work as soon as possible. And lastly, those key dates that we went through: declare your wages early, pay on time, and make sure you get your 3% discount. So they're the 3 key takeaways for today.
Brilliant, thank you. Alrighty, so look, I want to thank Mel and JA for presenting today. And look, we have run out of time to go through some of those questions sent in today, but I will definitely use those questions to help shape further webinars and also educational content. So thank you so much for submitting those. And thank you for tuning in this morning. As mentioned earlier, this session is recorded and will be sent to you shortly and uploaded to the WorkCover Queensland YouTube channel. So you'll find a dedicated playlist there with all of our webinars. We will also gather your feedback on this session via a short survey. Remember, we are always here to help. So if you have any further questions, please give us a call or get in touch with your relationship manager. You can also shoot a message through to WorkCover Connect and a team member will get back to you. Thank you very much for tuning in this morning and enjoy the rest of your day.